Thanks for tuning into this earnings conversation with Kaveri Seeds. They came out with Q4 numbers which were soft, but I reckon that is seasonal in nature. Revenues, standalone numbers, revenue from operations 60 crores as opposed to 54 crores, which is about 11% growth, but a negative EBITDA and a negative PAT number of 13.89 crores loss. See Mithun Johnson to talk about the year gone by and what is the outlook on the year ahead, because they have seen through the year of FY23 some bit of market share gains, success in some new products. Is he more optimistic about FY24 as opposed to FY23? Mithun, great having you. Thanks for joining in. Q4 seasonally is weak for you, I understand, but was this a bit more disappointing than what you had penciled in?
Thank you, Neeraj. Not really, because if you see the revenues are up by close to 10% compared to last year, fourth quarter. But fourth quarter numbers we should not consider because it only contributes 5% of our total revenue. But overall, if you see as a year, we have grown by close to 10% in terms of revenue, and more interestingly, 24% in terms of the bottom line. And even the margins have expanded by more than 3% compared to the previous year. This was a very tough year when compared to the normal years. If you see in some cases like cotton, even though the revenues are up by 7%, the volumes are up by 7%, the revenues are down, is only up by 1%. So there was a lot of stress in terms of the realization in the products. Even in rice, we couldn't realize much. Maize was flat in terms of the revenue growth and the volume growth. But the other crops like sunflower, bajra, where it's a very small portion, but the margins were really good. Being a multi-branded, multi-product portfolio company, it has helped us to increase the margins in the tough year like this. But going forward, what we see as an acreages, it should be remain flat compared to this year as a larger acreages, and we see a slight flat in the sense like 2 to 5% growth, and maize we see a slight increase in the acreages. As a company, we targeting 10 to 12% of the top line growth and 15 to 20% of the bottom line growth. And there's a lot of scope for expansion. That's the reason we say that's a good scope to increase the realization for this year.
Okay. I was under the impression that, hybrid rice seeds, you had a fair degree of market share gains as well. And in Q3, at least that segment showed a very strong performance. But I just heard you say that for you, the rice segment wasn't the best performer. Now, why is that the case? Part one. And can these market share gains lead to a better performance for FY24 or FY23?
Yes. If you see overall rice acreages were down at an Indian level, but we are up by 4%. That shows that we have gained market shares in the sinking market.
Right.
But a very positive it is for rice in the coming years. As we see the seasonality and the arrival of the monsoon and the availability of the water, the acreages change. So we don't see that as a major change. And rice is a very big crop in India. It's grown in more than 44 million hectares. Only 5 million hectares is under hybridization. And the seed replacement is also going up. It's almost like 70% in rice now. So by taking these factors into consideration, we see a good years, good years for rice in the coming years, not only for 24, but even for next 3 to 5 years. As a company, we have a very good product portfolio, which we have recently launched, and very good pipeline hybrids, which we are going to launch in the coming years.
Yeah.
It gives confidence that we can easily gain market shares in rice and in the improving and in the growing market. That gives a double effect for us in terms of the growth.
Yeah, and I reckon that even the paddy volumes, because of the launch of some hybrids, have done well. So that is also heartening. So would the mantra, Mithun, be that you grow your revenues at, let's say, 10% coupled with volumes and realizations, and then with maybe slightly better margins, you might be able to grow EBITDA or bottom line at a faster clip, let's say 15% or 20%? Would that be the mantra? And coupled with that, going by the track record of buybacks, I think you've done 5 in the last 6 years, that you show that kind of steady growth, do a buyback, and therefore shareholder value gets created.
That's what the plan is, that even in these tough conditions, when all the realizations are down, but being a multi-product, as I explained, being a multi-product company, we had a very good margins in sunflower and bajra. Those are not big crops, but we in the tough years like this, we were able to gain more margins, and that has helped to increase the margins. But as a larger chunk like cotton, maize, and rice, which contribute to the major chunk, those we have a good scope to increase margins, and that's the reason we are pretty confident that increasing the margins is not an issue for us. And other thing is that vegetables, we are growing in vegetables. This was a very flat year for us in vegetables. Even vegetables was a tough year for us. But if you take 3 to 5 years view, vegetables will contribute more, which is again a high profitable crop. As a combination of all rightly said by you, in terms of volumes, in terms of the price, and in terms of the margin expansions, we have 3 ways to increase our revenues and margins. So that gives confidence that 15 to 20% margin for next 3 to 5 years should not be a big issue for us.
Okay.
And again, the buyback in terms of the company policy, if we have an opportunity for in terms of addition of new technology or in terms of buying a new company, we'll utilize that cash. If you are not able to utilize that cash for that year, whatever is generated, free cash generated for that year should be rewarded to the shareholder in terms of the dividend of the buyer. That's the board policy. Not a board. That's a board internal decision that I think that might continue going forward.
Okay. Is there something that is on the anvil in terms of inorganic moves?
We are always for it, but it should have value for the company, just not for buying for the revenue sake, because we see a lot of growth in terms of the organic in India. We have very good scope to grow organically. We have added few more crops like maize, mustard, earlier vegetables, and now we are working in wheat and soya. So these are the huge areas where we are working at. So if you see really some strength, it's just not for the sales. If we see some sort of value addition in terms of the research or in terms of the technology, then definitely we are for it.
Got it. My final question, how are competitive pressures there? Because the only chink in the armor, if you will, that people talk about, I mean, launch of new products is never a question mark, even though people may say that that's a risk. But competitive pressures, how steep are they? And could they force you to doing stuff that you don't want to do otherwise?
That is not new for us. They are there in the industry for the last 40, 50 years.
Right.
So that's the
Has
activity.
it picked up though? Have competitive pressures picked up?
No, it's because it's a very high entry barrier business. No company can come in the next day. If someone comes in now and then they can't take the market, at least they need to spend 10 to 15 years. And then as of now, we don't see that sort of a pressure, but definitely competition is there. If you are not able to produce or if you're not able to develop new products, then definitely that will be a setback for you. So, but in a company, we are pretty strong in terms of the R&D. We invested a lot in the last 5 years. If you see last year's spend itself is more than 5% of our total revenue. With this type of revenue and with the spend is like more than 50 crores as a revenue expenditure. I'm not talking about the capital expenditure. The revenue expenditure is more than 50% this year, 5% this year only in R&D. So that gives, with this type of absolute spend, that gives a better edge over the other companies.
Got it. Mithun, always a pleasure talking to you. Thank you so much for taking the time out and being with us today.
Thank you, Neeraj.
Thank you. And viewers, thanks for tuning in.